I'm about to tell you why 95% of traders fail, and it has nothing to do with their strategy. I've been trading since 2011. I've turned $2,500 into well over $1 million. And here's what nobody tells you. The difference between traders who make it and those who blow up account after account isn't about finding the perfect entry or mastering some complex indicator system. It's about something far more fundamental. Stick around until the very end where I reveal how you can become part of the prestigious club of millionaire traders by shifting just a few key things. The uncomfortable truth. Let me share something that might sting a little. If you're watching this video hoping I'll give you some magic strategy that'll turn your $500 into $50,000 next month, you need to close this tab right now. Because what I'm about to share requires something most traders simply don't have: brutal honesty with yourself. Before I found prop firms and leveraged my capital at scale, I had already been trading for nearly 8 years. 8 years of learning, failing, adjusting, and building a skill set that couldn't be rushed. Now, I know what you're thinking. 8 years? I don't have that kind of time. But here's the thing. You're going to spend the next 8 years doing something anyway. The question is, will you spend them gambling away, account after account, or will you use that time to actually build something sustainable? The prop firm space changed everything for traders like us. Instead of needing $50,000 or $100,000 of personal capital, we can now prove our skill with challenges and trade with significant leverage. But here's what nobody talks about. This accessibility has created an army of gamblers who think they can shortcut the process. They can't. The real numbers. Let me show you what's actually possible when you get this right. These are my payout certificates from just one firm. You can scan these QR codes yourself if you want verification. Nearly $250,000 from a $2,500 investment across 2 accounts. But look closer at these individual payouts. Most of them aren't these massive $60,000 withdrawals. They're $1,500 here, $3,000 there, $6,000 on a good month. Why am I showing you this? Because sustainable trading doesn't look like what you see on Instagram. It doesn't look like turning $1,000 into $100,000 in a week. It looks boring. It looks like consistent small wins that compound over time. And another firm I traded with highlighted me as having the best challenge to payout ratio. I spent $165 and made over $100,000. That's about a 6.5x return. And you know what? Some people might look at that and think it's not impressive enough. Those people will never make it in this business. Here's a truth bomb. If you're the type of person who sees a 6.5x return and thinks, that's it, you have a mindset problem that no strategy can fix. Because that mindset is exactly what will have you risking your entire account on one trade, trying to 100x overnight. Rule #1. Risk management is everything. And now let me get into the actual principles that separate winners from losers. And I'm warning you, this won't be exciting. This won't be sexy. But if you can't implement what I'm about to share, nothing else matters. Risk management is everything. Not your strategy, not your win rate, not how well you can read a chart. Risk management. I genuinely believe you could make money flipping a coin if you have proper risk management. And I absolutely know you can have the best strategy in the world and still blow up every account if you don't. Let me paint you a picture of what most of you are doing wrong. You start a challenge. You're disciplined for the first few trades. Maybe you take a small loss. Then you see what you think is an A+ setup. This is it. This is the one. So instead of risking your usual 1%, you go to 3% or 5% or even 10% because you're just so sure this time. The trade goes against you. Now you're in drawdown. But it's okay, right? You just need one good trade to make it back, so you size up again and again. Each time your equity curve doesn't just go down, it accelerates downward like a rocket into the ground. Here's what winners do differently. They flatten that curve. When they take a loss, they don't double down. They cut their risk in half. Think about it this way. Let's say you have a $150,000 account with a $4,500 maximum drawdown. If you lose $2,000, $250, just 50% of your max drawdown. You now need to make 100% returns on your remaining drawdown limit just to get back to break even. You've created a mountain to climb, and mountains don't care about your feelings or your urgency. The poker chip mindset. I keep poker chips on my desk. No, I'm not gambling. This is a visual system I use to manage my trading week. Let's say each chip represents one trade at my standard risk amount. I start the week with 3 chips because that's my maximum. 2 to 3 trades per week, no exceptions. If I take a loss on Monday and use 1 chip, I have 2 left. Now here's where most traders go wrong. They try to make bigger bets with their remaining chips to make up for the loss. But what's the easiest way to get more chips? Make each chip worth less. Risk smaller amounts. If I reduce my risk by half, those 2 remaining chips can now give me 4 opportunities instead of 2. I've bought myself time. I've bought myself margin for error. I've bought myself the ability to stay in the game even if I'm on tilt. And let's talk about tilt, because this is where trading psychology gets brutally honest. If you've been trading for more than a month, you know exactly what I'm talking about. Tilt is that moment when the red mist descends, when you stop following your plan, when you start revenge trading, when you tell yourself, just one more trade to make it back. Professional poker players, the ones making millions, have one skill above all others. They know when they're on tilt and they walk away from the table. Amateur traders, they can't even recognize when it's happening. They're on full autopilot, clicking buy and sell, hemorrhaging money, completely unconscious to what they're actually doing. Here's my personal rule, and I want you to write this down. If I take a loss, I'm done for the day. I don't care if the perfect setup appears 5 minutes later. I don't care if I'm sure I can make it back. I get up from my desk and do literally anything else. Why? Because I've recognized something about myself through years of painful experience. I am human. My judgment is compromised after a loss. The chemical cocktail of frustration, disappointment, and urgency is not conducive to rational decision-making. And rational decision-making is the only edge I have. The 2 to 3 trade rule. Let me address something directly because I know some of you are thinking it. Kyle, how can I make money if I'm only taking 2 to 3 trades a week? I see opportunities every day. No, you don't. You see movement, you see volatility. But opportunities? Real, legitimate, high-probability setups? Those are rare. Last year, I made nearly $500,000. You know how much time I spent staring at charts? Barely any. I wasn't glued to my screens. I wasn't monitoring every tick. I was living my life, and when the market presented clear, unambiguous opportunities, I executed. Because here's what nobody tells you. The whole point of getting into trading is freedom. Time freedom. Financial freedom. Location freedom. But if you're spending 12 hours a day stressed out in front of your computer, frantically entering and exiting positions, what freedom have you actually created? You've just built yourself a prison with better views. I recently saw a reel from Umar Ashraf, another professional trader, where he said that out of 20 trading days in a month, he typically only sees 4 to 6 days with real opportunity. 4 to 6 days. That's it. And this is coming from someone who's been profitable for years. When I was on my best runs, the times I was turning thousands into hundreds of thousands, I was not blowing accounts. I was sometimes sitting in drawdown for over a month. A month. Not getting paid, not making money, just waiting, protecting my capital, staying alive in the game. Because that's the secret. You don't need to win big. You just need to not lose. If you can avoid blowing up, if you can protect your capital, the wins will come. The market will give you opportunities, but only if you're still in the game when they arrive. Strategy. Keep it simple. All right, let me give you the actual strategy framework I use, because I know that's what some of you are waiting for. But I'm warning you, you're going to be disappointed by how simple it is. I trade top-down from higher time frames to lower time frames. The daily chart must be clear. If I can't determine where the market is going to trade in the next 1 to 4 days, I have no trade. Period. I don't care what the 5-minute chart is doing. I don't care about that perfect scalp setup. If the daily is uncertain, I'm out. When I do have clarity on the daily, I'm looking for what I call a power of three setup: accumulation, manipulation, distribution. If we're bullish, I want to see a manipulation below a key level, like the midnight Eastern Open, taking out London or Asian lows. That's my liquidity raid. Then I need to see a bullish market structure shift or displacement, typically marked by a fair value gap. My stop loss goes below the previous daily, 4-hour, or 1-hour low. My take profit targets the previous daily, 4-hour, or 1-hour high. I'm aiming for minimum 2, 1 reward to risk, and here's the critical part. I don't touch the trade until it hits that 2 RR. No micromanaging. No taking profits early to be safe. No moving my stop loss because I'm nervous. I plan the trade, I execute the trade, and then I walk away. Why? Because every time you interfere with a trade based on emotion, you're degrading your positive expectancy. If your strategy wins 50% of the time at 3, 1 reward to risk, you'll be profitable. But if you keep closing winners at 0.5 R because you're scared while taking full 1 R losses, you'll be broke. The math doesn't care about your feelings. The 80/20ths rule you need to know. Here's something that took me years to understand. Trading is not actually about analysis. Analysis is only about 20% of the game. The other 80%, that's all psychological. It's managing your emotions. It's sticking to your plan when every fiber of your being wants to deviate. It's having the discipline to do nothing when action would feel so much better. Most traders spend 80% of their time trying to perfect their entries and maybe 20% thinking about psychology. They've got it completely backwards. You know what makes the difference between a good month and a blown account? It's not finding the perfect entry point. It's what you do after you enter the trade. It's whether you can sit on your hands when you're up 1 R and getting nervous. It's whether you can take a loss and not immediately try to make it back. It's whether you can recognize you're on tilt before you've already destroyed your account. Let me tell you about one of my biggest winning days. I placed my positions based on my analysis. Then I went to sleep. When I woke up, I was up massively. The trade required 0 work. I was literally unconscious for the most profitable part. Compare that to the days when I was glued to my screens, watching every candle, second-guessing every decision, moving stops, adjusting targets. Those days? Almost always losers or tiny wins that didn't justify the mental energy expended. The market doesn't reward effort. It rewards correct positioning and patience. That's it. The mental edge. So let's talk about the mental edge, because this is where everything I've said either comes together or falls apart. Your emotional volatility needs to be flat. When you win, you can't be euphoric. When you lose, you can't be in the gutter. You need to be almost robotic in your response to outcomes. I know what you're thinking, but Kyle, I'm human. I have emotions. Of course you do. I do too. But here's the thing. Your emotions about trading should not be tied to individual trade outcomes. They should be tied to process adherence. Did you follow your plan? Great. Be happy. Did you violate your rules? Then be disappointed, regardless of whether the trade made money. Because here's a truth that will save you years of pain. You can make money on bad trades and lose money on good trades. The market is random in the short term. What's not random is whether you followed your rules. That's the only thing you actually control. When I take a loss now and I followed my rules perfectly, I'm genuinely content. I might even be happier than when I win on a trade where I violated my plan, because I know that the losses that follow my rules will be paid for by the wins that follow my rules. But if I start winning on trades where I broke my plan, I'm reinforcing terrible habits that will eventually destroy me. This is the mental edge. It's recognizing that the scorecard isn't your P&L this week. It's whether you executed your process with precision. The P&L is just a lagging indicator of process quality. The truth about discipline. Let me end with this, because I know some of you are still looking for the how to stop overtrading, stop overleveraging, stop revenge trading. The answer is going to disappoint you. Just stop. There's no special meditation technique. There's no motivational video that will suddenly make you disciplined. There's no trading psychology book that contains the secret. The secret is deciding that you're going to follow your rules and then following them. That's it. If you can't do that, you need to seriously ask yourself whether trading is for you. And that's not me being harsh. That's me being honest. Because the market is the most expensive teacher you'll ever have, and it doesn't care about your feelings or your potential or your dreams. I've been trading for over a decade. I've made over $1 million in prop firm payouts. And I can tell you with absolute certainty, the difference between me and the 95% of traders who fail isn't that I'm smarter or I have a better strategy or I know some secret. It's that when I say I'm going to take maximum 3 trades this week, I take maximum 3 trades. When I say I'm cutting my risk in half after a loss, I cut my risk in half. When I say I'm done for the day, I close my laptop and walk away. Discipline isn't a personality trait you're born with, and it's a choice you make every single day, sometimes every single hour. And the beautiful thing about choices is that you can start making better ones right now, not tomorrow, not Monday, right now. Call to action. If this video resonated with you, if you're finally ready to stop gambling and start trading professionally, here's what I want you to do. Take out a piece of paper right now and write down 3 rules you're going to follow this week. Not 10, not 20, 3. Maybe it's maximum 3 trades this week. Maybe it's, I will cut my risk in half after any loss. Maybe it's, I will not trade for the rest of the day after a loss. Write them down. Put them somewhere you'll see them every day. And then, this is the hard part, actually follow them. If you found value in this, leave a comment below telling me your 3 rules. Subscribe to the channel because I'm dropping real trading psychology content every week. No fluff, no BS. Just what actually works from someone who's been in the trenches. Remember, the market will still be here tomorrow. The question is, will you? See you in the next one.